Mr. Chairman, thank you for being here. When I'm back in my district in Texas, I'm constantly hearing concerns surrounding the fundamentally flawed Basel III. We've talked at length about that today, Endgame proposal. These concerns are not only coming from my banking industry, but also from farmers, ranchers, small business owners who are concerned about how this proposal will impact the ability to access capital in the future. And to all of us, did it not raise alarms? And we've heard about the 97% today of public comments on this proposal, and they all came out negative. And Americans across all sectors are worried about the disastrous implications that will follow this proposal and have tried to make that known to banking regulators who continue to ignore them. It is time for federal regulators to take these concerns seriously and, quite frankly, just, I believe, start over. So I urge you and your colleagues to rethink the misguided policy and do what is best for American people, small business, Main Street America, and withdraw the Basel III proposal. Now, Chairman Powell, given the concerns raised by financial institutions, again, farmers, ranchers, et cetera, and other communities across the country, can you elaborate on how the Federal Reserve is responding to and addressing these comments that are mostly negative and request modification, delay, or complete withdrawal of the proposal of Basel?
Yes, I will. So we're in the process of reviewing the comments. They were quite voluminous. They were very detailed, a lot of data, a lot of analysis, and that's just what we wanted. So we've got those, and now it's a lot. It's hundreds of them, and we're going through them, and we're just at the point where we're about to begin then turning to the question of what changes should we make to the proposal. We haven't made any decisions. We haven't really gotten to that stage yet, but we're getting, remember, we only got the comments less than 2 months ago, so it's just we're at that stage. So we're looking at it. As I mentioned, my own view is that there will be material and broad changes to the proposal as we go forward, and we haven't really made decisions yet, though. It's just a little bit early for that.
We're glad you're looking at it. I want to bring up the long-term debt proposal rule, which would require banks to issue enough long-term debt to cover capital losses. Now, Congress worked to pass legislation requiring the tailoring of regulations to the size of a financial institution. This is meant to protect banks of all sizes and allow for families and businesses in my district to have options to meet their lending needs. So the Fed's long-term debt proposal would undo any sort of regulatory tailoring and puts into place a new long-term debt issuance requirements on regional banks, which require these banks to issue long-term debt both at the parent holding company level and the IDI level. Now, these regional banks will face increased costs when they are already facing towering regulatory burdens from this administration, and those are the banks that people do business with. So, Mr. Chairman, do you believe that this proposal rule goes against the requirements of S-2155, the Economic Growth, Regulatory Relief, and Consumer Protection Act, and will you commit to exploring this issue further with your colleagues?
So we're committed to implementing 2155. We believe that the regulatory and regulation and supervision of banks needs to reflect their size and activities, and that's something we'll be considering as we go forward with this.
Okay. Short time I got left. Americans continue to feel the pain from runaway inflation created by the Biden administration as everyday costs continue to stay expensive. As you know, I'm in the car business, and inflation is just running rampant in my industry. And the irresponsible and partisan American Rescue Plan forced through Congress by Democrats only made inflation more of a problem. And now American families and businesses have been forced to deal with runaway inflation for 3 full years now, which has caused some major hardships. So quickly, the ARPA injected nearly $2 trillion of deficit spending into our already struggling economy. And how does this type of inflated spending, combined with economic headwinds like supply chain shortages, impact the economy? And doesn't this kind of reckless spending actually fuel the pressures of inflation?
I think there are a lot of causes of the inflation we've seen. We saw this inflation everywhere in the world, so the reopening of the economy after with very strong demand and constrained supply, you saw inflation in all the advanced economies. It was a little sharper here at the beginning. I think there's a role for monetary policy in that. There's a role for fiscal policy. There's a role for the pandemic, a starring role for the pandemic. Our job is to deal with it, and that's what we've been doing.
Well, thank you for always keeping small business in Main Street America in your calculations. And with that, Mr. Chairman, I yield back.